We are live. Sunday, is it the 10th? I think so. Yep, April 10th. We have a long list to cover. Thanks for being here. If you are here, the number is growing in the room. And if you're at home watching, there's also a companion spreadsheet that goes with this. It's over 150 tickers. They are linked with charts and comments and trade ideas and warnings and good news and bad news. So anyway, long list to help us go through it. So I won't have a lot of time to chit chat. So let's get to it. First thing first, sentiment. Like, I feel like this is nothing tradable. I'm just telling you, there should be something big coming, either a sharp correction or a big explosion upside. It seems like a whole bunch of angles in the world are abuzz. There's a little fire under a whole bunch of things, commodities, supplies, and it's all from the pandemic. The shutdown, the global shutdown, has created a wave of things happening, I think, and it's tumbling out of control. I'm not being an alarmist. I'm being a realist. I'm seeing headlines from all different areas: food, cars, money supply, and all of that. We'll see. We'll see. There are a few places that are more vulnerable than others, and we just have to be cautious of what kind of risk we take. It should be finite. So I wouldn't be selling naked puts left and right. That's what I'm saying. Credit put spread's fine because the amount of money you lose is finite, versus you sell a whole bunch of puts, prices drop. I mean, they're good stocks at decent levels, but that doesn't mean but you're still left with a lot of losses for a long time. Okay, having said that, let's move on. I'm going to start with the earnings. It's pretty important this week. First, this guy I don't usually look at, but if they tell us there's a sharp drop in revenue, maybe it's the first sign of the Federal Reserve poison starting to work. I think it's too soon, but look for it. JP Morgan kicks off banks. Usually it has another bank or two with it, unless I missed one. I don't consider that one a bank. Even though it's a money manager. I mean, it's a huge company, but it's not like Money Center Bank. But this one will move all of the other banks. So if I wanted to bet on earnings as a bet, I would use the other banks because they're going to move with it, and the premiums won't die. So if I buy a call or a put for JP Morgan, as soon as JP Morgan opens after reporting, those premiums are going to die. The implied volatility will just get crushed. The other ones won't. So they'll be hurt or gain, not to the extent of this one, but at least you will have, it's like buying a lottery ticket with several drawings. Personal preference. I also want to pay attention to this guy. Every once in a while, this one will move all the other semiconductors. So be careful of this guy's effect onto the other semiconductors. Okay, I think this is United Health. If that's the case, I couldn't read it. Then you might want to take care of your Teladoc and Clover and such. UNH. So I don't know how it's going to affect them, if at all. Just be mindful of that. So this is the caveat, like things to look for. Okay, so let's just jump into it. And this is alphabetically ordered. I think I got everybody. Long list. Oh, I see already a broken link. Okay, a lot of potential trade setups from that. Okay, and the comments are in the section. I'm gonna put the comments in front of me just so I would know also what we're looking at. Okay, so when the stock is this high, this is Alcoa. I want to know how high is this. So I expand. This is historical highs. I don't want to start longs up here. It has not been a good history for it. This might be different. We might be going into world explosion in whatever they do. I'm not sure. I think it's all about price of commodities. JP Morgan said commodities or whatever can explode 40% higher. Maybe they're too late. I don't know. We'll see. 40% higher from here is a disaster for all economies. That's all I'm saying. Hoard whatever you use, because it's going to be, if they're right, everything is going to double in price and be short of supply. So just fair warning there. If they're right, it's going to be a disaster for everything. Apple, It is elevated, so you need to decide, are you investing or trading? There's no need to pile into investments. There are plenty of uses for faster trades. Supports everywhere, resistance everywhere. It's near all-time highs. You take this out, you will get to all-time highs again. This is where the all-time highs are. So there's no panic. This is saying, where's the problem, dude? So if somebody wants to get long here to get to swing that, I don't blame you. If somebody wants to buy the dip, I don't blame you. What can I do in the meantime? Iron Condor, I don't know. Credit put spread may work. Depends on your portfolio. If you're short a whole bunch of things, maybe a credit put spread in Apple would be good. If you're long a whole bunch of things, maybe an Iron Condor in Apple would be good. In other words, I don't expect much before the earnings reaction. ABC, I can't believe there's a company called that. I don't know what you're asking me here. I mean, let's expand to a weekly chart. What when you do this, I don't know what do you, I mean, are you asking to see if you wanted to get long? I will never say yes to that. So if you want to short it, it is shortable, I guess, but I call these TH. They're too high to chase and too hot to short. If you know the company and you want to pick a fight with it, then you can buy a put spread or something, but not for me. Up here, I would say if I'm trying to get long, I should say to myself, shoot, I missed it. Catch it on the dip. Airbnb is doing what it's supposed to do. First of all, everything played out and then some, this arrow. And now it's backtracking, which is normal price action. Target 1 of the backtracking was here. Target 2 is a little bit closer to here. So I could do a credit put spread if I can assume that the markets are going to be okay. So it's doing everything normal. They overshot a little bit. See, I thought this would play a better role. So let's put that here. Pivotal should be resistance. Actually a little bit higher now. And support. Iron Condor, credit put spread, like same comments as Apple. Tradable. Investable, not sure. Super long term, maybe. Affirm, oh my God. I mean, talk about disappointment. Not a deal breaker completely, but okay, so let's zoom out. The Affirm problem is the descending channel, right? That has been ongoing for weeks. Look, they sell every rally. And then they did that thing, and then they fell, and they swam sideways, and then they started rallying. It's like, okay, we're out of the channel. Nope, we're not. Went back in, not the channel, back into the swimming sideways. Unnecessary. So this ascending channel has not started. We're still waiting for one. Let's get back into shorter term. So rallies worked almost perfectly. Faded, should have come up here and challenge, but then the markets had its dizzy last week, and it fell back into what? Back into this candle. So far, fine, but you cannot make any more lower lows. You need to hold the lows from last week. Otherwise, you're back into this hole, and it's a hell you don't want to be in. Company's still fine long term. I think it may have had some negative repercussions from SoFi's words. SoFi's management is an idiot right now. What's the point of warning about your whatever, updating your, downgrading your own, anyway. I think management should not be allowed to say anything like that outside of their earnings report. But that's me. So maybe there's some sympathy weakness there. They're kind of same companies. Kind of. Not really, but kind of. Okay, this is, I think this is not the ALU we want. This is the ALU we want. There we go. Right, Raz? Okay, I think we did a weekly thing on it. So the buy the dip worked on a weekly basis, is working. The resistance is working, so it's stuck. Closer look gives us more information about tighter ranges for the more active investors. It's basically stuck in a range. Maybe you swing it long, get out, swing it long, get out. Yep. AMAT. Worth, if somebody knows the company, every time they fall here in recent history, they bounce. Kind of like Intel. So here's the thing. You can get long for a swing trade opportunity. If they bounce, they're going to bounce again. Something along these lines. I'm not sure if they can get to here, at least to here. So it is a bounceable thing. But you have to stop out a low below last week's low could carry lower to 108 or so, 104. So if I get long, I need to make room for it. So if I get long by selling a put spread, that's fine. If I'm buying calls or shares, I might want to stop out quickly. But it is in a place where it has found support before. Now there's earnings. So if I do whatever, I need to make sure I know what I'm doing around the earnings. AMD cannot afford another red tick. All right, cool. That's all I can say. That's why I said you need to pay attention to TSMC. Lower highs this sharp and a line this sharp, that's not gonna last long. And if you lose this one, the technical downside is big. So you can look at AMD and say, what's going to happen to AMD is going to happen to the whole market, because it is part of a big group. If AMD is crashing, NVIDIA is going to fall, SMH is going to fall, XLK is going to fall, all the semis are going to fall. And they can't afford to do it. They need to hold the levels, otherwise the NASDAQ will fall. And you know what I mean? So there's a lot on the line. How about that? There's a lot on the line down here. Mute your audio. I think I hear somebody in the background. Just make sure you don't say anything embarrassing. So you can't really mess around with it. You can get long and as a trade saying, okay, the breakdown cannot happen, because that would would cause great consequences, too many negative consequences. I mean, that's a silly logic, but you could use it, I guess. Your audio is still open. There we go. I think so. There. AOSL. What is this? Alpha Omega Semiconductor. There. AMD Semiconductor. Pivot zone. I would call it like, don't lose this zone. It cannot lose it. Can't afford. Sorry. To lose it. Because if you do, then you're going to have a downside that's going to be painful. This will come quickly, but the target is much lower than this technically, which it doesn't need to go there, but at least you will lose this much fast. So be careful with AOSL. So if you want to bet on it, that this is not going to break apart, this is where you place a strategic trade long and you stop out quickly. FMG is also... I want to make sure I picked up the right one. Yes. Okay. What time frame was I looking at? Let's go with daily. Start there. All right. So it's swinging wildly, and you have a defined range. So you break out of the defined range, you're going to shoot much higher. Looks like a nice cup and handle. 29.30 would be attainable, but you have to convincingly break out of this one. Or you wait until it comes back here and you catch the falling knife. Nice clean range. Stock like these, you can't infer much from the chart. I mean, I could tell you, oh, it's prior resistance, but look at this rally. I mean, you're going to have to get granular and get nitty gritty, fighting with in the trenches. You can't make, unless you're investing in it, then just do homework and invest on information, not chart. That would be, so if you want the next trigger, of course, it would be, closer to 495 will get you more open air, and vice versa. Dips should be bought. AXON probably also okay. Falling into support. If support fails, they'll try to go lower. They have rejected, so I guess you can move this one lower. But really, the support is where it's at, and these are overshoots. You have to be careful. You lose these overshoots, you're coming down to here. Resistance will also be a catalyst up. American Express and MasterCard, somebody later asked for. It's not an obvious entry point. They will move with banks to a degree. So if banks fall, and banks have a habit of falling on earnings, they pop and then they crap very consistently. So maybe this time it's different, but you know what they say about that. So I would rather get long somewhere down here, 170 or lower. Up here there's no room for anything. Banks are expected to, the only upside potential is that now I'm reading that banks are expected to deliver sharply lower revenues or net income, because all the free candy from the Fed is going to be disappearing. I don't think it's early enough to show that yet, but people are expecting it. Therein lies the opportunity. If people are expecting it and it doesn't happen, pop, potentially sell the pop, because they always go back and fall. So if you get a earnings pop on any bank, get out. Scroll up. I already posted the link. Baba. People keep trying to catch this falling knife and it keeps falling down. Pop, pop, pop. So banks don't make more money as mortgage rates climb, because the only reason mortgage rates are climbing is because their borrowing rate is climbing. That's what the Fed controls, the overnight lending rate that banks pay for. Banks pay, and in fact, it might be more difficult to make if they're talking about an inverting yield curve, which is them borrowing at a short term to lend at a long term, and an inverted yield curve says the short term rates are more expensive than the long term rates. Then it would say, if I'm a bank, I'd be an idiot to lend anything to anyone. So no, that is a fallacy. Banks need a wider spread to profit. That's my understanding of things. Okay, Baba, again, fundamentally a blind buy to the moon. Technically can get to 180 if left to do its thing. But now you're talking, China is in panic mode, I guess, over the virus. Their old methods of locking everybody down and it are not working, or they are in doubt. That's not my words, what I'm reading. So if that's the case, how will Baba get affected in all Chinese stocks? So I would use rallies to get out. I would use breakouts to chase. Or I would just own it as an investment for 5 years or 3 years or 2 years. It may be a huge payout with a small risk. I mean, how much lower can it go? The math doesn't allow it to go much lower. The income is explosive. The management is solid. They are expanding into other areas. So, BlackBerry. This is a company that's completely misunderstood. On dips, get long. They're now in a different kind of business. It's a cult. I can tell you that firsthand. It's like the TLT. It doesn't allow you to stay profitable for long. If you take a position and you get a quick buck, get out. If you're investing in it for the future, like the person that asked for it, fine. It is a way of doing things. So it's a trade, in my opinion. An investment, I'm not so sure. I don't believe in the company because I don't know enough about it. But if you know enough about it, about its intellectual property business, go for it. They're about security now, I guess, operating system security or something. 8 is a trigger to get you to 9. And you lose that 5.8 unknown risk. BBB, what is this? Bed Bath Body Works. Oh my gosh, another one of those really easy company names to say. Okay, so don't know why you'd want to mess with that. On a daily basis, it's lower lows, lower highs, broken. Revenue streams broken. Dinosaur, dying business, challenge business. Let's see, total revenues. They're trying to recover from, trailing 12 months. So tremendous recovery now, finally. Almost back to what it was 5 years ago. I guess that's the positive news. Statistically, not that expensive. Overview, are they burning cash? They're not burning cash. Okay, so it's a slow recovery. So eventually, I guess they will find the bottom. That's the good news there. But you don't have evidence of how low can it go before it does that. 40 to 38 is a much better entry point for me. Okay. I don't need to say anything. If you twist my arm, I would, it's not shortable from the standpoint like there is no trigger to short it, except the thesis that it's going into massively big fail before. You can try that again. And if it takes this out, just get out because no clue where it goes. What do they do? Let me guess. Materials. Oh, biotech. Okay, so make sure to get up to speed on the news there. Billy, everything I said about Baba, it's got exactly the same chart if I'm eyeballing correctly, like some sort of an inverse head and shoulders here that could bring it up to here if they can take that out. So Billy, if Billy can take this out, 35 and change, maybe they can challenge this heavy resistance area. This is the June pandemic base that they lost, and they're below it now. Not sure why I want to go there. So BlackRock, I believe they're reporting, right? Phenomenal company. If you want to have fun, go read Peter Thiel's comments about Bitcoin and BlackRock and JP Diamond. I'm with Peter Thiel on all of that, and Buffett. He calls them nasty names, so I wouldn't want to do that in public, but his thought process is correct. Central banks and big money companies are super worried about Bitcoin. That's why they trash it. They literally trash it. And you don't see that often. You can't trash an asset that's outperforming all of the assets you own put together in a linear basis. You're either stupid or blind, or you think we're stupid. So they call it a horrible holder of value. Okay, I guess we have a different definition of value. Okay, so BlackRock, earnings, question mark, fundamentally sound company. They're passive investors, so they make decisions and they stick to them for a long time. The stock needs a breakout from here, and if you do, then you have upside. Otherwise, you buy the dip into this sharp point. And if you lose this sharp point, we're gonna, it's 500. You lose this one, it's going to 500. So, but that's a big, big line to lose. It's more than 500. I'm gonna stop here for giggles. And of course, the opposite. So let's just bring this one to here. I don't know why I didn't update that. That's a breakout potential. So meanwhile, it ping pongs inside. There is support right here. I'm gonna take this guy and borrow him here. And this is okay. What happened there? This was not supposed to move, supposed to copy. Whoop. There. So that is the BLK. I'll update the chart in my sheet. And you know what I just realized? I didn't go down the list of questions. I usually do that. So I may have to get back to you with the question on an individual basis. Okay. What do you want? Buy. Leverage your mortgage, everything, buy. No, kidding, of course, kidding. The bears have lost any reference points. I guess not even this one. So this is a monthly chart. So this candle is not closed. So this is 1 month. So arguably in that month and this month, it was here, but then they closed lower. So we'll see where that month ends. Not an obvious entry point, not a breakout yet from a monthly chart. Definitely breakout on any other time frame. The weekly, you don't have anything. Daily, you don't have anything. So you can't short it blindly, but it is definitely in a breakout. And if you're starting to look at it for the long term, dude, you missed it. That's what I would say to myself. Okay, BSX, look at this one. You take this out, 48, 49. But then, or buy the dip. But that has been failing for a year. So you be the judge. This is it. If this is it, it's going. BX, is that Blackstone? Yes. Falling into support. It has fallen through it. It delivered the downside that it has delivered before. So we've seen it before. Catchable falling knife. If you're comfortable with $2 or $3, or I mean, this much downside potential. It probably will move with banks, I'm not sure. But start looking for longs is not shorting it. And if you lose these, I think it will have immediate support below that. Beyond Meat, to tell you the truth, it's gone beyond my watch list. I'm sick of it. And it's stupid headlines out of the blue. And they cut both ways, but recently more negative than positive. And management fed us a whole bunch of horse crap that didn't follow up on. Fed us horse crap. So revenue is still growing, but I'm not too concerned with that. I'm concerned with their message. What are you, retail, not retail? Why aren't you in my face at Costco? Why did I buy the competition when I didn't? I can't even tell you the name of the competition right now. I swear to you. Wait, Impossible Burger. Why did I buy the Impossible Burger, which I can barely remember the name, and not Beyond Meat at Costco? Because they're doing a bad job. Because if they're not doing a bad job, I would have bought them. It's in Ralph's. That doesn't matter. I'm just telling you, it is in Costco as well. But why did I buy them? So anyway, technically, you cannot afford to lose this. You lose this one, you're going into 2010 maybe. 20 for sure. 10 maybe. So that is a horrific development. But this is a daily chart. And you have an opportunity to crack above 54. You get above 54, you can get to better place. But look at that orange line is the busiest this stint here. So I would say 74 to 55 is very heavy. You can't cut through it without a headline. The headline has to be fantastic, and that's how the company can help it. Give us some sort of a BS headline to go. Otherwise, you're going to spend months trying to crack through that. First thing you need to do is higher lows. So you can't make a lower high. A shorter term, we can have another conversation. Citigroup, I would get long to 57. But we're going into banks. So if you can get long and get out before the JP Morgan earnings, that might be it. So it's a technical long off of a strong base and a reversal to 57 and 62. Those are the targets. CCJ still in the hands of the bulls. Same story as aluminum and everything else, I think. As what is this again? Copper. Following uranium. Okay. You still have kind of the same areas of importance, and you're just. It's not my thing, so do your homework on uranium. We talked about it during the week with other tickers as well, URNM or something like that. So it's hard to invest in these. It's a good trading vehicle if you're fast enough. Arguably, the breakout was here somewhere. Target could be here somewhere, so don't be stubborn shorting them, but just know how late in the process you may be. I don't know, maybe. Okay, so whatever this is, at this time frame, this is a super long time frame. You can see this was a problem up here. It took him, I don't know, a decade to come back to here and break out. So this area will become support. So 40 or lower, that was a bargain opportunity. And I think it will be there for a while. So you have support below. You lose 40, you're going down to here, but I don't think it happens. But therein lies the risk. Conversely, 50 plus is super resistive and a trigger eventually. So all right, Chewy. Okay, your mic's hot, friend. Can somebody help me out with that? That'd be great. Chewy. I love the company business. Thanks, Rez. I love the company business. I would buy it on dips, and boy, is it. So it is in a great base with an unbelievably important line to hold below. So I'm going to move this because it is. If you lose this one, you're going down much lower, and I don't see the need. It's already in a great base. Business is solid, growing well. I'll check on one thing here. So if you lose this one, you're gonna have an uh-oh moment, which is not likely. Uh-oh moment, like a downside to the low 20s. Whoops, 1T off low 20s, question mark. So not likely. Catch it. All this are question marks because I want to know. I want to get notified to do something. Meanwhile, this. That's like death. Now 52 becomes an unbelievable catalyst, but a wall. Horrible fail. Now a challenge. So break out of this one, you will get to 64-ish. Meanwhile, tink, 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 tink. So maybe, Iron Condor-ish. If there's no earnings. CL, I assumed you meant this, but I think we covered this, and CLF as in crude. Not an obvious entry point. Great bounce into the middle of this range, but now you should start feeling the heat from resistance into 82. Very simple. CLF, why is that not coming up? Okay. This is where it is. You must hold. You have resistance. Both are catalysts. You lose this, you come down to the low 80s. Simple. Simple. Whoop. We lost our track. CLF. Yep. Okay, CLF. I would say this red pattern said that it had a target of 2664, and then we had this flash candle that went almost to it perfectly and bounced. So here's the question: did this slide eliminate the need to get to 64 so they can take this out and go to the moon? That's the big question. So watch those numbers. I'll give you 3 numbers. 32.4. I don't know why I didn't do that. What's going on, TradingView? Somebody mark the time. We are 7:32, so 30 minutes into that. They asked me to give them proof of how the thing snaps, and it just did that. Maybe I'll give them a snippet. Okay, so you have resistance. See how it does that? And then this is a catalyst up. And there should be support here. Otherwise, this is target 2. CMCSA, I could be convinced to do a credit put spread. So it does have resistance above, support below. It's good range. The support has been tested. I could be convinced of doing a credit put spread. A credit call spread maybe as well. Maybe an Iron Condor. This is a catalyst up. This is a catalyst down. I don't think either happens without a headline. Speaking of Costco, not touchable. It's way too high for my taste. Great company. You'd have to wait for a dip. If I were waiting for a dip, not even before 570. So come down to here, then we'll talk. From a trading perspective, from an investment perspective, I wouldn't touch it for months. You missed it. CRM. So I think last week I said, ooh, nice inverse head and shoulders with much upside potential. However, is it too easy? And the answer is apparently yes, it's too easy. So now we have to contend with catching the falling knife, which is a reasonable knife to catch, because we have prior lines we can deal with. We may have a higher low, depends on how low it goes this week. Even if it gets to 190, perfect. But you have to respect the levels below here. But here's the logic. Below here, we're in the quarantine levels, and the company is not deteriorating. It's a massive beast. So if you use the logic of, this is another indication, AMD in this one, if they falter, the market's crashed. Literally crashed. So we are going down to 15% in the market or something, which is makes it the unlikely scenario this week without a catalyst. So this is an important week. It's like a hidden. And what do I say about short weeks? They bring drama out of nowhere. Every short week we've had of late has been very difficult. Very difficult. So it is important to stay nimble this week and be responsible. I will say the same thing with the Sunday night video. I'm making notes. Okay. Good company. I would do a credit put spread while waiting for a recovery, at the risk of, having to deal with a broken credit put spread. At these levels, I'll probably take shares if it gets attacked. So CrowdStrike has done well. Maybe still be doing this. I mean, it didn't dip. It just went straight up halfway through. So maybe it did its thing. It has support into 196 and 192. So there's no panic. It has resistance. Equal opportunity of breakout or breakdown. And if it does break down, it's catchable. There's an open gap down here, so I put an alert for myself. I'm going to raise the alert a little bit to start looking. I'm not saying it's coming down. I'm saying if it does, I want to have a note. Cisco, range bound. It has solid support, solid resistance, ping pong inside. So I would get long down here. I get out up here, get long. So it could get to 55 on this rally if they hold the support. It's not my mouse. Why would it be my mouse? Somebody else was reporting the same thing. And it's not my cursor that's moving, it's their crosshair. It's the dashed white line, not the plus sign. The dashed white line occasionally, the crosshair is the plus, the large dashed plus sign moves on its own, especially during market open days. It's like it's trying to snap itself to something else. Okay, CSX, the green line says what I think it's going to do. This is a base somewhere here. Whether it dips or not, I don't know. But if it does dip, it's an opportunity to get long. But if it loses this, it's going much lower. But you have resistance, we have support. Carvana, what are we missing? The P&L is explosive. They do spend a lot of money, so that's probably the missing part. If you're gutsy, you might want to take a long with a stop fast because it loses a crap ton of money, if I remember correctly. And yes, it does. So it burns almost $3 billion. It burned last year $3 billion almost for its operations. So that tells me that this net income here is BS. It's a pro forma or something. So I'm missing a piece of the puzzle. Just be careful. I'm willing to take a risk on it with a long for a swing back. So a credit put spread maybe, knowing that it could blow up in my face. CVS, I would not chase it into this. I would chase it above this if it's a trade. If it's an investment, there's no rush to own it. So this is a 2-hour chart. Right, so you have a catalyst here and a catalyst here, but until they're taken out, they are areas of resistance. So look, here it was running just as fast. Maybe not as fast, but then it got here and then failed from here. Now it's back to here. Easy go, easy come. It's like nothing happened. So now we're back to the same battle. We'll need help from headlines or the market. Marcus, it's not the freaking mouse, I promise. This is a new mouse. I use 3 mice. They're all top end, I promise you. None of them, it's the same symptom. Okay. Going back to the mouse. It's the mouse, not the mouse. The crosshairs is not the mouse. The mouse is the pointy thing. The crosshairs do their own thing. Okay, I don't like airlines. I do like to trade them, and I don't see an easy trade. If I get long here, I should stop out immediately because if it loses this level, last week's low, maybe this low, it's going down to the low 30s. Oh, Rez, okay, funny. All right, so if you break out of 40.3, you're going to $3 or $4 higher. So here's the thing. If you're trading it, you get long and you stop out immediately if you lose support. The idea is if it doesn't lose support, it's going to swing back up to some degree. And if it does, then maybe you get long above here. But oh, okay, so that changes things. What are the odds that they're going to tell a good story? Not likely. Now, how much bad news has been priced in? No clue. This is a big question mark. So if you want, talk to me on the day it's reporting. I can give you clues as to what it's going to do next day based on the new tool we got. That we've hit it. I think we've only had 3 mistakes out of, I don't know, 15 to 18 guesses. We only guessed wrong 3 times. Direction, not size of move. Direction. At least it's something to have. Better than nothing. Dash. This is another one of the ones that spends a lot of money, I think. By spend, it's burn. Guess not. Nope, never mind. I'm thinking of something else. Maybe Airbnb. Anyway, falling into support. Almost similar comments to the one before it, where if the support holds, it should swing back up to like 124. If it takes this on out, it goes much higher. So these are 2 different conversations. The first conversation, support, will it hold? If it does hold, odds of a rally are good. But if it doesn't hold, it's going down to the 88. And here's the thing. If it does rally to here, I would exit because I think it's going to fall and trigger a head and shoulders to come and fill this gap. Not sure, but it's a possibility. So don't overstay your welcome if you get long and make some money. Dell, I don't trade it anymore. I suggest you don't either. It is in support. It's a good company, but the management always screws us with headlines. Like AT&T, there's another headline. I don't know what it is. I have to go read it. Somebody was asking, some sort of split or whatever. So arguably, it has strong support. Another argument would say, you just triggered a head and shoulders that's going to 40. Which one is going to win? So the head and shoulders I see, it's triggered. So you have this pattern here that says this much, a little bit lower. And then you have this pattern here that said this support, proven support, that says not on my watch, friend, but it is support until it's not. So they're both saying the same thing. If you want to get long, make sure you have a tight stop. We are looking at Dell. I need to update. This chart is better than the one I had. Paste. Okay. Long is doable. Danaher, Dr. D.R. Horton. Is that a builder, home builder? I'm going to say flat out on all the home builders that are today, there are like 2 or 3 of them. I would avoid them like the plague. This technically shows a nice rally coming. There could be some big numbers changes in home builder forecasts. I'm speaking from my friend who also is a builder, and his comments are scaring the bejesus out of me. So just be careful in case. Now, headlines aside, home builder aside, chart comments has support, needs to hold, and it looks like it can hold. And if it does hold, it should go to 78, maybe 83. But warning. Be warned that all home builders could like come falling down. Okay, what is this here? Disney. All right, I think I need to get into more granular information. There we go. Okay. So it had a wacky area, and I think they've gone over the wacky area a few times to make it unwacky. So now we have a range. No longer a wacky area. They filled the wackiness. So now they have a range and a base. You lose this one, you're going for a ride lower, but it should be strong support. In other words, I don't think it does this all by itself. If the market's correct, yes, it's viable. Meanwhile, it can rally back to 142. So this is a candidate for a credit put spread, maybe even an iron condor for active traders. But acknowledging it's risky. Discovery A, I don't mind a long here. It is a manipulated stock, I think, yeah. It's kind of like, what company is this again? Kind of a deal. So you lose this, you may be going for a ride to the mid-teens. So be careful with that. It's an unlikely scenario, kind of like what we said earlier, but it's right there. And then you have resistance, lower highs versus trying to hold support. That's the battle. So it's range bound. So be careful why you're owning it. Maybe DraftKings is the one that spent. Yes, it is. So I'm thinking. So DraftKings, I like the chart. I don't like the fact that they're spenders and that Wall Street is not liking those kinds of companies. But look how well it traced our yellow line. What you want is to hold that support again. So it failed here, kind of. You know, see how the thing is moving? It failed here, kind of, and now it needs to hold. There's no more room for error. You lose this one, you're going for a ride. Odds are you hold, and if you do, then you should get a bounce back here. Make it a trade, not an investment, unless you want to own it for super long term. Business is good long term, but short term, very iffy scenario. Not scenario. Very iffy fundamental picture, like on paper, for the quote analysts. Okay, going into a very tough area. That's all I have to tell you. This is going to be a slog. I would not buy longs. This is still support, yeah. DWAC, it is in breakdown from here, as we noted. The downside target is much lower. And this is another trigger for it. They can try to swim out of that. But even if they get to 60, I would get out as a trade. That's what they're doing. They rally, they sell. They rally, they sell. God damn it. Okay. Trading view. Okay. Here's the thing. Well, you're not kidding, Jack. So I said the other day, actually last couple of weeks, I said, do your research. Find out if all SPACs went to $10. If that's the case, this one's going to $10. I'm not saying it deserves to be there. But if all SPACs went to $10, this is not going to be the one that doesn't. So I'm just telling you that. Especially now that Twitter is maybe going back to sanity, politically speaking. That's the takeaway. Oh, by the way, there's something going on with Twitter. Something going on that could affect Twitter or something in the middle of the week. I believe Elon's going to be on TED Talk, or whatever that show's called. So he might say some things that move Twitter stock, is what I'm telling you. If you're long Twitter or short Twitter, know you're going to have a catalyst in the middle of the week. When, I don't know. Just do your homework. Okay, EPD, what is this? EPD. Looks like a gas company. Natural gas, there it is. Let's see here. Just like all commodities, this is not an obvious entry point long term. This is a monthly chart, so we're looking back to multiple decades. You can see how this was a huge support level lost, and when you come back into a huge support level, it becomes huge resistance. But short term, you can't short it based on that, because it's a meme and it's going to the moon. Almost the same thing on this one. Technically, it has it's come down to the target one on the dips from up here twice. So it established support. So now it has the opportunity to break out from here, but it is still not an easy long for me from an investment. It's one of those, you're either actively trading these things, or you need to just get over it that you missed it. Okay, shorter term, you lose 1080, you're coming back to 1020 or whatever. So they said ETH, I assumed the Ethereum. Ethereum has an I'm long, so it's ETH USD. That's the one I want. I drew lines on it. Where are they? Okay, so there they are. You take out the recent high, you're going for 4,200, if not 4,600. But you also have the incentive to bleed down to 3,100 and maybe even 2,800. Now the quotes differ, depends on who you ask, which is complete bunk. In this case, we're looking at Coinbase quotes, so know which ones you're talking about. So use the references. The recent low versus the recent high. Those are the two triggers. Taking either of those two will carry momentum in that direction. I'm long. I haven't closed my longs because you know my story. I think I just bought one batch of 3. I think crypto should continue lower. Now, I noticed that they've lost 46 again, right? So they haven't recovered 46 since the crash. So they're still on track to do what I said. And if not, I'm already long 1/3 position. I will add the second third if and when Bitcoin hits 28, 29. If it doesn't, I'm already long. Same with Ethereum. I'm long Ethereum. I'm using the Bitcoin numbers to trade Ethereum. Ethereum, Solana, and CRO for different reasons. I also nibbled on Zilliqa, ZIL, for a completely different reason. It's the long shot metaverse investment. Basically, it'll be the money spent in their what is it called? Metapolis. It's just pretty clever play on word. They basically built a fake world, and you can live in it, and you're going to need ZIL to spend money there, buy homes and such. That's the easy way to look at it. It's such a cool idea. I can't wait. My son, on the other hand, he's 20. He hates computers. He's a hands-on type of guy. Okay, so 115. needs to hold, otherwise you go much lower. Long term, I think it's a hold as an investment long term. The business is healthy, they're not overspending, they're profitable, I believe. All this from memory, double check everything I said. Technically, it has a sharp support line that must hold. You lose that support line, we're going for a ride lower, much, much lower. So, not all in. Leave room to add if you're investing. EVgo. Don't like it. No particular reason. I think 14 is going to be a roof for a while, but if not, then it's the catalyst to get you to 16. So as a trade, chase it above 14 and 14.3. Or buy it now and hope for it and stop out if it doesn't work out. And if it dips to 11, get long. Trade it. If you're investing for the long term, don't even bother about these moves. Just own it for the long term for what you believe in. Simple. If it's an investment, that's the thesis. It's not always about charts. You can use charts, or you can use fundamentals, or you can use both. Simple as that. I see support down here. I see resistance up there. It's going to ping pong in between the two. If either of those two are breached, it carries momentum in that direction, up or down. I don't know what Excel is. It sounds like, okay, so I guess know how it's going to go. Up here, monitor the relative strength index. If this keeps trending down, you're listening to these words, then this is the path for it. Don't short it outright unless you know how to stop out. And if it does go above this prior fail, it's going to go, and there's resistance above. So if you force me to trade it right now, I would be looking for an entry to be bearish on it. Facebook, it did exactly what we wanted. I shared the trade that worked out so well. Credit put spread, debit call spread, and look what it did. That was my path. I can reload because it dipped. So somewhere down here there's support. It has fallen into support already. I can renew the same trade only higher. So I can do this and that and do this basically. Whoops, it didn't work. Shift everything up. Sell a put spread, then buy call spread when it takes this out. Because when it takes this out, the target of which, somewhere here, but here's the important part. This would be start of the gap. So I don't think this is going to be easy, but it could be a gateway to the gap, which starts at 250. Gateway pop, target into the gap, past 250R. So I think the bears will fight hard for this line, and then when they give way, it starts the gap. So credit put spread is pretty good. FCX, again, it's one of those runaway things, and you're going to have to trade it based on shorter term charts, or if you truly believe that this is it, load up. Not for me. I would forbid anyone in my family to do that. I think this is going to play out. It's yeah. But I don't know anything about the company. So you do your homework, and if you think fundamentally it's going to 76, arguably you can make that argument. On a dip, buy it. So if this happens, then on a dip, buy it. More logical entry for investors. Swing, take that out, and you get to 76, 77. But breathe. You can't just go to the moon. How much of a rally was this? 1,000%. If you're asking me to get long after a rally of 1,000%, I say, let's go revisit people who bought Novavax and all these stocks up at moon levels. I'm trying to remember something with UPS. So FedEx cannot afford to lose its recent support because it just opens unfamiliar downside targets. Something's wrong with this company. Can't, I don't know what. I just don't know. I don't like how it's behaving. You see how that is? Maybe this red line is playing out. So if they don't go back above 219, 220, I would be seriously worried about this company. Don't catch the falling knife. They're super busy, but they're so inefficient because of what Amazon is doing. All right, check this out. Pop sold, pop sold, pop. You tell me. Yeah, right. So it's due for a bounce. So if you can make the assumption that the support will hold because of how far back it goes, I'm okay holding longs for a pop, but you have to know that it's a risky long. Okay, so if you're okay risking whatever it costs to buy calls for, say, June, I would hold them. At the money calls for June, maybe if you're active, because if you take this out, you could get to, gosh, 28 and then 35. So worth the risk, I think. I may write it up as a trade for some people this week. So Futu is a stock I don't track anymore just because I can't take it seriously with that name. That's for starters. And it's one of those stocks that is hated by Wall Street right now. So clearly the growth is there. I just don't know why, and it's not expensive. So on paper it's perfect, but it can't find a bottom. So maybe this was it. Maybe they flushed everybody out. So if they lose 32, I would just seriously get out, because now it has a big wall and they can't get up above it. My stop out was out here. You have resistance. I think right here is going to be super difficult, that guy. Support, I don't know. Gap, maybe you buy it on a dip to 28 to 29. GE makes sense to hold a little bit. Maybe it bounces, has support. It is a buy to dip area and it has worked several times already. So if you're a trader, boom, you're in a buy to dip area. If you're an investor, it's reasonable to take starter position in GE. Gilead, there it is. That's the opportunity. You have support below. You can break out from here. So if you dip, you can get long. If you're not long, I would wait for the breakout and chase it. It looks like easy air. So maybe it's not so easy. I don't know. Is it too easy? GM. So my comments were spot on for months when they were rallying, when Ford was going to 26 or whatever. My comments were concern, and here it is, playing it out. This is a bounce. It should be support. I don't think it's out of the woods. They're selling rallies. So let's say it rallies to here and you're long. I would get out. I would seriously get out, because this is what's going on. Look, you can draw a channel on it. This channel right there is going on. And it's not touching. I'm not touching lines. I'm showing you the behavior of what the machines are doing. They're selling rallies. So if they come up to the upper end of the channel, you should get out. So 43.50, I would be out. What if it goes to 46? What if it does? I'm just giving you what I would do as a trade. If you're in it to invest, I want to bring out another piece of caution. I did FMG earlier. If not, I'll just pop it in right here. So the idea of switching to EVs is not friendly to these two companies' P&Ls, because they're inefficient. And they say they lose money on EVs. And they're switching their profitable business into EVs. In other words, they're not stealing new Tesla clients. They're stealing their own non-EV clients into EV product, like Macy's was doing. Oh, I'm growing my online sales. Yes, but you're taking away your foot traffic, which is profitable. And at the time, their online sales were not. So you're cannibalizing your profitable product into a non-profitable situation. So there's going to be a serious dip in the P&L. That's a theory. Okay, you can take the other side of that theory and saying, no, Nick, you're an idiot. Then this is your entry. I'm just telling you straight up. So FMG, I know I looked at it. Okay, big wide range. Whoops. With an opportunity above short term. This is not a buy to dip opportunity. It's a breakout opportunity. So you take that out, which was a prior fail. You can have some open space. But I usually don't like to get long into it unless you're making that assumption and you can stop out. or you take bite 1 of 2. Or if it dips, I would get long anywhere into 20 to swing it back up. This is a weekly perspective. So you break out of here, that's a wall. You break out of here, whew, open space. Okay, so there it is, FMG. Why did it... Wait, we're going back to A's and B's? What happened here? Oh, it was not... Oh, okay, so maybe it's not all alphabetically assigned. Okay, bummer. Sorry about that. So where were we? Facebook, FCX, FDX, Fastly, Futu, GE, GM. Okay, gold. So you typed in gold. I assumed you want... see, that's not the gold I want. Barrick Gold. I did make the correct assumption. So check it out. Big catalyst. You take that out, you're gone. But look at that. That's the one you want to worry about. Whatever happened in March, early March. This is a weekly chart. That March week, look at it. This week right there. So they opened here. Somewhere in the week, they hated it. They loved it. They came back and closed exactly. And I mean almost exactly for the whole week where they opened. And now they're inching into that. So you take that out, you have space. Otherwise, I would assume they fade here and buy the dip. So depends on what you're doing. Are you investing, trading? So good company. Garmin. I'm missing a piece of the puzzle. The revenues are growing. Everything is great, and the stock cannot find footing. So kind of like PayPal. What the hell? So we're missing a piece of that puzzle. I guess you can count on support somewhere here to say, okay, I want to hold it for a little bit and see if Wall Street wakes up. If not, I'm risking a little money. I'm okay with that. Just make sure it's a position that is sustainable, like short-term calls. That would be horrible. Long-term calls, better, more expensive, but you have to be diligent stopping out. Don't come to me and say, oh, I'm down 90% on my calls. What can I do to hedge them? You can't hedge something that's already 9%. The word hedge is for something that hasn't started losing or barely started losing or slightly winning. So use good judgment there. Credit put spread might work best, but I don't know how liquid it is for options. HD, I would avoid like the plague right now. Arguably, so last week they flashed a warning sign that they broke below support that has much more downside to go, but then they popped right above it. So if they break last week's low, I would be seriously concerned, and this goes hand in hand with the home builder concern. I have grave concern about the real estate market. I know a lot of you are real estate people in here. You may disagree with me. I'm not a professional in an industry. I'm just looking from the outside looking in. I'm putting 2 and 2 together. Interest rates, mortgage rates skyrocketed. I know that because I have a small adjustable mortgage left over that I never bothered to do anything with. It was 2.5% last year. It just adjusted to 4. So if that mortgage loan was $2 million or $1 million, that's a big chunk of money out of my spending pot to spend on anything else. And here's the risk: consumer spending depends on that, right? It's going to get crimped. And consumer spending is 2/3 of the US economy, which means the Fed poison, if they listen to these idiots squawking about needing 0.5 point, we're going to crash this economy as fast as we grew it out. So this all comes from the decision to shut down the world. The consequences of that decision financially on the businesses have created the crimp in supply now, and the money pouring of money to reflate it, which is now they're doing the exact opposite. So they should let inflation work itself out, and we need as painful. Inflation is better than what they're doing. That's my uneducated guess. Anyway, inflation will fix itself. When things become too expensive to buy, people will stop buying them. Case in point, my son yesterday sold a 1990 Suburban with 350,000 miles for $8,000. Last night. The guy showed up, side note, was strapped. He had a gun on his in a holster. Side note, unrelated, but he showed up with 8,000 in cash and bought a 350,000 1990 vehicle for 8 grand. So just to let you know, that stuff won't happen if people are crimped for cash. Inflation will fix itself. Hyperinflation wouldn't. We don't have that. Anyway, HD. Packing heat in his bourbon. Yeah. Bourbon. Barb the Bourbon. That was its name. So be careful with Home Depot. Honeywell, great company. Maybe snapping out of this descending trend. Now maybe working on some ascending action itself. You do have a, let's round it, $200 target catalyst. It's a problem until it becomes a catalyst. Why don't I have a line there? Maybe it's on a lower time frame? No, can't be. Okay. This is your problem and your opportunity. Good company, I believe they're crankers, like solid performers. They're like you can forecast its profitability. 24 PE seems on the high side for them, but let's look at net income. Boring. So boring is consistent. Credit put spreads on bad days. I don't know if they're liquid enough. Hood. Okay, you're hanging on to dear life. You want to buy out. I mean, they have millions of subscribers. Maybe somebody will buy them out. If somebody wants an in into crypto, they have crypto, right? If somebody wants an in into crypto, maybe they will buy them out. Otherwise, you've got like a hair trigger floor. If you lose that one, you're going to 4 or 5. I don't know. That was an amazing opportunity to get out. HPQ. Is this the computer company or is this the other company? I know they split it in two. Okay, so I'm shopping for a laptop right now, and I'm landing on HP, which I thought I would never do. It's the cheapest. I'm looking into all kinds of other names. I need a beefy, like almost gaming like laptop, and not for gaming but for what I do. And I'm landing on them. So they have good products. Why is it so crazy? What is this? A triple gap. Gap, gap, gap. Like they don't want to be at 37.50 at all. Look, they didn't touch it. They went through it. They went through it. They went. Now they're still like, what is going on with 37.50? Look at it. You can go back. It's like 37.50. So assume it's going to come into play again. I would buy the dip below 37.50. This is a Buffett computer company. Yeah. I think he needs to retire. It's like Ali fighting at 50. Or Foreman at 50, whatever it was. He didn't take a stake. His company did. Right. Okay, so this was a place to hold, and they didn't, and now they're trying to recover it, whatever this is, IBM. But talk about underwhelming company. This is it, but it's pretty stable, so I would do an iron condor in it, or sell a put spread. It's relatively stable given this craziness that's going on. IFX, did I get this one right? IFX, this is Germany, right? Zetra, there. Support for you, Rez. You do have support. I like this 27 line, and if not, it has backup. And if you lose the backup, but and then this support now, of course, is no longer support. It's resistance. So you're kind of like, if you're in it, it's too late to do anything. You can count on the support trying to help you out. Or if you're trying to get long, maybe half batch. Whoops. Okay. Needs to hold, and if it does hold, you have the opportunity to bounce. Simple as that. If you're gutsy, hold it for an opportunity to bounce. And if you get here, I would get out. If you take these out, 50 can come fast. But you can't afford to lose this. Unknown downside risk. Intel, I would get long. Remember this? It played out like a bandit on some headline. I don't know what it was. They bought something or whatever. So every time they fall below 46 or towards 46, opportunity to get long. So why not start the ball rolling by selling a credit put spread down here? So the way I would deal with it, I may share it this week. I would sell a credit put spread, and then if I get heat, like if price falls into it, I would just take the shares. But caveat, if those scenarios we talked about with AMD and another semiconductor company, if they play out, and if markets crash, then Intel may not hold this, and if it doesn't hold that, it hasn't fallen in 3 or 4 years, it will go below 40. It's almost a guarantee. But that is a long if, so it's got 3 things. You need semiconductors to collapse. Maybe TSMC could start it, but you also need the markets to collapse. And this one, if it loses these, which is a highly unlikely scenario, I would bet against it, then in the 30s it goes. JetBlue, worth a long with a tight stop if there's no earning. And I would exit anywhere into here. 1 month out, it's an island. I don't understand. Johnson Controls. Oh, Intel. Okay, thanks. Johnson Controls. Support, gap. On the way down, gaps could be interesting for machines to hunt. If there's really a gap in volume, there's no obvious gap in volume, not that I think of. There isn't. So I wouldn't short it because of the gap, but it's there. If we get close enough, it becomes a self-fulfilling prophecy. But the opportunity is somewhere in here lies support. Boom. So if you're long, I don't blame you. If you're looking to get long, you're doing the right thing. KBH, Homes. I would avoid. I mean, technically, they're falling into support-ish, I think. So let's go to a daily. Okay, that's not enough. I go to 2 days. All right, you see that? You see this guy? Number 1. Look at this. To the penny. Normally, I would say get long with a tight stop. That's a good bounce. That's also a tradable comment with backup support. So if you know this company, it's okay to try to get long. My only fear is I think there's a home builder reporting this week, and if there is, it might say some nasty things. Is that them? Did they report? Oh, they already reported. Then never mind. So yeah, it's a viable dip, as long as you know that there's total risk below. Interesting. Okay, don't know why we're looking at this. The chart is broken, and it's near its all-time lows. You better take care of that part by doing your homework on the company. You're not going to get definitive information from the chart. It's telling you it has been lower, and it could go lower than that. So you're gonna have to do some homework. Technically, you take this out, you have some spikes, and if you dip into here, it's a buying opportunity for the immediate stop, because if you lose this one, unknown downside. Kraft Heinz. Who knew that this business is so exciting? What is this? So that's your next action plan. If they take this out, unknown. Meanwhile, are they tracking it and to fail? Sometimes they flash this by mistake, and whoever did this will walk the price up to get to it, and then they fail. So careful what you're doing. If I'm not long, I wait to see what happens at 42. KKR. Support below, resistance above. I think it stays in between. Laser, I think that's LiDAR. Support, low, high, somewhere in the middle lies the truth. It has support here, so I can assume, okay, this is a support zone into 13.5, 13.3. If you want to get long with a tight stop, that's fine. Otherwise, there's not a lot of clues here. Yep, not a lot of clues. Lennar, okay, I'm sick and tired of myself saying the same thing. Viable dip area under normal circumstances. However, do your homework on the prospect of home builders. You lose this, You go into 68, maybe 66, maybe lower. A lot of resistance above, and I mean a lot. Okay, Curtis, thanks. So Curtis thinks that there was some positive development in how money flowed into laser last week, meaning big money might be building something into it. LIN, what is this? Lindy. So 312 needs to hold. You lose that, you're going to test 307. You lose that, you're going to like 296. Simple, as they say. That's not my forecast. That's what happens if they lose this. Meanwhile, you have 3 trigger zones to go higher. Each is resistance until it's broken. LSPD, light speed. I'm done trading this piece of crap. I'm done with it. But it is a good business. If you look at the P&L, it looks good. But it's one of those where the revenues are rising almost as fast as the expenses. Wall Street has no appetite for that. So I've tried twice. Both had winnings, and I didn't book either. So I'm now 0 for 2. I've said, you are better than me, ticker. Therefore, I've left it alone. You take out 35, you can get to 50. So up to you how you want to play this. Sell puts to own shares, I guess, would be the only way I would play it now, and that's it. LUV, vulnerable for a dip. Boy, were we right. It did provide that dip. Now it becomes an opportunity to buy into strong support. So it's on my to-do list for this week to do a credit put spread of sorts, and then a debit call spread if I wanted to. But I enjoy not needing a rally to win. MasterCard, what I said about American Express earlier, middle of the range, great company, no reason to expect crashes or anything. I would sell a put spread on it, preferably on a bad day. Maybe if the banks hiccup towards the end of the week, I jump into this one, because it's not really a bank, but it sometimes moves like a bank. So if it gets punished because of banks, it's a good business to sell a put spread in. MGM, it's worth a long, knowing the risk below. Now do your homework to see if it has exposure to Macau. I don't know what the headlines are going to be from Macau. So this right there, well, look at that. That's a box from the left. Look how it matches this candle. I mean, we can't make this stuff up. This candle edges almost exactly the box from before. That's crazy. Absolutely crazy. I'm going to leave it here so we can have that note. So there should be buyers down here. Whew, I'm starting to yawn. ASMR moment. Thank God I have backup solution next to me. We have some Mountain Dew. What time is it? 8:18 Pacific. Not a good thing to be drinking that early in the morning. Okay, so we have support. Worth a shot to see if you can swing it back up, but it'll be a trade. So if you get up to here anywhere, I would book it at X%. So if I get 15%, 20%, I usually book. This environment doesn't leave you much room. Monster, speaking of energy drinks, is that the same company? Yep. Has higher low momentum, lower high. They're coming to fight at a very pivotal zone. Anything can happen. In other words, stay on your toes. You should have support at 79. You should have resistance at 84. The fight is between those two. Whichever one fails first, it goes in that direction. I got you. Hold on. They're asking for the link. There it is. Okay, so Monster is a good technical fight. I haven't looked at their financials. Wow, that's pretty freaking impressive. So there's no... If you look at the financials, they say the Bulls should then win this like hands down. Hands down. So let's see if they let them. And it's not that expensive relative to itself, and it's profitable on all levels. Yep, it's a good company. Interesting. That's a good fight. MOS. So I'm going to go to a monthly chart and say nothing. Mosaic. So if indeed we're going to have world hunger, we're going to need fertilizer companies, and they're going to be in control. So don't short it. I'm just pointing out prior fails to know how much you're going to book out of your profits. Just leave it alone. I used to trade this with options, and I stopped years ago. We should be concerned about how the world is progressing. It's very depressing. The more homework I do about everything, I get depressed. So I try not to. So I occupy my free time, which I don't have a lot of, with stupid thing like watching go-kart races. Okay, so I like what's going on here. What is this? Medical properties. So they got to here. It was a bearish pattern. They touched target 1, target 2 almost in that bearish pattern. Now, if the bulls can continue on higher, and if the bulls can take this out, they can get to 2250. So you have a good base. You have a very defined range. So you breach the upper end, you get to here. It's not obvious they're going to breach lower end. That looks like solid support without any headlines. Merck, okay, right, wow, so almost there. Mom, you can't buy this stock. No, Mom, no, it's gone too far. You missed it, Mom. So that that is a pretty tough deal to chase up there. What did they do? Did they have some sort of a new headline of sorts? Wow, that's pretty amazing. Oh, let's look at the long term. Okay, so it's done this before. This is them doing this. These are monthly. So for a whole month, this month, it was here looking like a breakout, and then this is where they closed. This month, look at this month. They closed here on this month. They opened here, they fell to here, they went to here, and they closed at the ups, the highs of the month. When was that? Then November 2021. This is where it went on COVID news, right? Yay, we're gonna kick ass. This is where it closed that month, and this is now month after month coming back. Okay, we're back to the close of that highest month. This is the highest month close, and this month is not closed. So this month can be this. You don't know, is what I'm saying. That's why I'm telling Mom she can't buy the stock. It's not an obvious entry point. It's not an obvious short. It's not an obvious entry point. But it's interesting. Maybe I do want to short it. I don't know. Get my revenge on Lily. Lily kicked my ass. Out of my own mistake. Okay. So what is this? Morgan Stanley. Going into earnings, bank earnings, I don't like it. It has support. One would say logically they have support, they have no reason to lose it, but they have earnings coming. So be very careful. If you're long and you get a rally into the earnings, I would book some, if not all, if it was a trade. If it's an investment for the super long term, then that's up to you. Good banks, I mean, good. None of the banks are bad, like as a company. They're all profitable. They all have balance sheets like you wouldn't believe. It's just price action. That's it. What is this? MSM. I don't know what that is. Anyway, not an obvious entry point. Has had many fails, including recently. So I would buy the dips. On a daily basis, there's nothing obvious to do. Granularity here, we have support at 8150-ish, 82. And trigger would be above 87, 86.90 or whatever. And taking that out will get you to here. Micron, you could convince me to sell a put spread, but then again, look, another one of those where AMD, and I forgot what the other company, you lose this, you have a scenario that's super painful. Unlikely. It is so super painful. No, it wasn't. It's so super painful that it's unlikely, but it's there. So you have to respect it. If the bears whip out their claws and AMD falls through its cracks and this one falls through its cracks, expect 52. But I could be convinced to do a credit put spread. NCR, boy, are they still in business. These are the cash register people, right? Solid base. Solid base. If I'm long, I'm not doing anything. I stay long. If I'm looking to get long, it's a viable thesis. Solid resistance. So you have a very well defined range. Ping pong inside, what does that mean? If you're trading it, you get long in the lower ends and exit up here and see if you can scalp some money that way. If you're investing for the super long term, then you should, look at a higher time frame and decide. Wow, look at these monthly candles. What? This is insanity. That shows you that every month they try to rally and every month they fail. Same thing. They try to, that's just, wow. These are pretty freaking phenomenal. Anyway, nobody asked, unless I messed up the order. We'll see at the end. If you want to add it, we'll try to add it. Newmont, same concept. They're running on headlines. You have to go out in time to even see when was the last time they failed. What is this? Sheesh. Okay, so this is a quarterly chart, and look at that. This is 1987. This is the 1987 crash, folks. Remember Black Monday or whatever it was called? And you're saying now we have crashes? We don't. That day, that crash was 22%. More, actually. Something like that. Clearly, not an easy entry point. However, it's trading on completely different concepts, and we don't have a crashing market. Maybe we do. I don't know. Oh, Tommy. Yeah, sure. Thanks for the note. Somebody's messaging me directly. Thanks, Rez. I appreciate you. Somebody keeping me on track. I'm talking too much. Okay, so too late to chase for an investment. That's the story. Netflix, avoid it. I'm done with it for now. It's not behaving very well. Somebody's asked me about SoFi if I'm still bullish. I am. I'm super disappointed with the management itself. I'm so pissed off. I had winnings. They were 100%. I booked a little bit, but I'm down back to a small loss now in the same calls I have at 750. So I'm going to stick with them for a little bit and see what happens. That's the SoFi side conversation. So Netflix. It has support. I just can't trust it. The way it's trading, I don't want to risk money. So we did a credit, an Iron Condor on it that expired on 4/1. I shared it at some levels, and that worked out. Maybe I can repeat that. It's those two boxes. So I'll try to repeat that this week. We'll see. I don't like the way it's trading. I mean, we've tracked it well, but intraday is disappointing, I guess. NHI, you got resistance, you got support, anything goes in between. What is this? Northrop. So we did short successfully, and we did go long successfully one of its competitors, right? LMT. I have no interest in trading Northrop here. If you force me, I would do what I did with LMT. I would do a credit call spread up here and leave it room to rally, and then when it dips, I'll do a credit put spread down here. But I don't think it's liquid enough. I'll double check, but remind me if I forget. This was nothing. NRZ. Oh, somebody wanted to see the futures of NQ. I think that's what they meant. So if we go to 15 minutes, it'll show you the dire situation that we have right now. So remember what I said about AMD, and you can't sneeze. Check this out. You lose the low we put it hours ago, which we put here and here. We're going down for a ride. 2%. So it's not the end of the world, but to the market it is, because we can't tolerate one red tick when we have 14 days of up, and then we get one day, oh, it's the end of the rally. No, it's normal price action. So when 2% comes, we will be crying our eyes out. There might be some support in between, but this is the precarious position we're in. Okay, so we have support at 10 or lower. Tommy, I'm going through 160 tickers. So I did do CLF before, so I will share a video and it'll be in there. I will share a template. Scroll up, there's a link to a whole table of tickers. You'll find the CLF in there. This video is going to be over 2 hours already, as it is. So NRZ is falling into support. Don't know what that is. So if you're long, or you're trying to get long, this is a bankable zone. Nvidia, let's go to 60. All right, so this is in progress. This was a confirmation. Credit put spread here is working. I don't remember the debit call spread there, clearly not working. So that's why I favor credit put spread, which is a bull put spread, which is a way to generate income without needing a rally and leaving room for error. So credit put spread was the proper thing to do, because this didn't materialize. This did. So has support, but has room to fall. So there's no like hard line like AMD. Nvidia, it's okay to be long, maybe on a dip. I don't know if this is a hole they want to chase. At some point, it has a rally back to 7.8, actually higher. The internals suggest that it should have support. So if it falls into 6.8 or 6.85, I'd be tempted. OGN, you have resistance and an opportunity above and a whole bunch of support below. So be careful what you do with that. If it falls to here, get long with a tight stop. OHI. Yeah, I agree with that, Rez. OHI has support. They told you where they want to bounce last week. So use that as your base. If it falls into it, get long with a tight stop, because you lose that unknown risk versus a whole bunch of resistance. So the opportunity is there, but it's not going to be easy. Okta, I think it does the green thing. It has supports. If it falls more, I would get long with a very tight stop. They already lost super important levels, so they're going to be super difficult to break out of. So book your profits fast. On semi, look, AMD, all of these like need to hold. Are they Taiwanese? So you want to see what happens with the whole sector. Are we really in deep schmutz? There are signs that we are. Like if you go on eBay, if you want to buy any components like video cards, the face value of the video card might be $250, $350. You go to buy it, it's like $900. Because nobody has them, and whoever has them, they're just jacking them up. Open, this is real estate, so be careful. Let's go to a daily. It's been in a selling zone for a while. And this yellow line. And then it had started building a positive momentum, but nope, not anymore. We're back. So they're still selling rips. So see these blue things? They're still selling rips. Now, if you rip here, what are you going to do? So the next one would be interesting. If this is it, so I'll put a question mark. Would be interesting because it would bring you to fighting with the $10 level. So buy the dip, but be realistic as to where you get out. Oracle, buy this dip for the same price action. Higher lows, banging on a roof, you can get to 94, but first you gotta hold support, come back and bust out. So I like it. See, I put a flag on there. How do I trade this? Credit put spread, calls, or debit call spread. Credit put spread shorter term, debit call spread, or calls longer term with stops. Paramount, same thing. It's falling into support, tradable. To see if they want to finish. Actually, they did finish this. But now you can repeat the process. So I remember drawing this, and they beat resistance, but it's a zone. So I can repeat the process on dips. However, I caution you, losing this might bring you to 31. So I'm going to put an alert down here. Paycom, I have no interest. Low, high, somewhere in the middle, I have no clues. It is a high point of volume. Look at it. for this period of time, but there's a gap below, maybe gap, maybe not gap. I would prefer it lower, and it's still too high of a dollar amount to mess around with. This is a sharp trigger higher. In fact, I'm going to move this to here. This is a sharp trigger lower, but it should be bulletproof. We can say, okay, we should have support here as well. I need to swap out the charts. What is this? Paycom. Middle of a wide range. That was my comment. Okay. Penn. I like it long, recognizing the risk lower. I like it better than DraftKings. It's got a better P&L. It doesn't bleed, but people hate it more than DraftKings. But as an investment, I would hold it. As a trade, it has the opportunity to get to 40. Step 1, don't make a new low, because then I would repeat the process down here. I'll put an alert. I'm going to say long as an investment. Pfizer, be ready to chase it. It's itching to go, but know that it could drop to 53 in a blink. So if you're long, you're okay, but just be reactive. Need I say more? One picture worth 1,000 words. The bears have it. Let's go to a daily chart. Okay, so let's see. There could be a snapback rally if the conversation goes well. I mean, if the fight goes well. There's no evidence from the internals improving. So you're going to need another piece of evidence that says why you should go long now. You do have support. This is a very pivotal zone. So if somebody wants to go long hoping for a rebound rally, make sure to stop out. You're not crazy. Make sure to stop out. If it goes to 36, very interesting. Was it a 1 hour harm? Okay. Oh, no, it's a daily harm. Okay. So the harmonics pattern suggests a rebound rally to here, but there's no trigger for that. It just says start looking. Pins. Okay, this is a company that I would invest in for the long term. If markets are higher in the future, Pinterest should also do well. The P&L is solid. The site is solid, so I don't like it, but it's pretty popular. I don't know why it cannot find footing. So just like Affirm, when we thought it was establishing an ascending trend, nope, goes back to base. At least didn't make a new low yet. So if it does make a low lower than 22, big question mark. What the fudge, right? So you have interim supports, and if I'm long, I would sit in it long. Maybe it gets bought out. I'm not sure. Palantir. Peter Thiel, by the way, I mentioned earlier, is the chairman of Palantir. He's co-founder, I guess. Same with PayPal, which I did not know. So him and Elon are probably buddies. What are we? Palantir. 1250 is super important. You know, 1250. 1250 super important. 12 super important. So the range needs to hold. I get it. You want to retrace one more time. You need to take this out to get back to the 16s. Long term, I have faith in the management team so far. Short term, I have concerns from the government spending there. Concerns, not reason to sell it, because so far there is nothing in the P&L that says that's happening. There's a drop in the amount of business that they're losing from the government, but there's a pop in the other one offsetting it, and then some. That's how they grew 30-something%. So they're selling more oranges than apples, but who cares if the total sale basket keeps growing? If I'm long, I stay long. If it loses last week's low, it's a catalyst to get to 1150. I'll get long there. I think I closed my longs. I will re-engage. Okay, what is this? Holy mackerels. So cover the gap. No reason to get long here unless they make better headway. So 48 plus is an opportunity to get back to here. Otherwise, buy the dip into the neckline from which it just broke out. Post, not an easy place to start into this prior fail. This is a harmonics target, 3 of them actually taken out. So if you're investing in it, this is not the place. Let it dip, buy the dip, comes back, take this out, and goes to 78. But I think there's a 70 before 76. PayPal, another disappointment. Oh my gosh. Excellent company fundamentals, excellent reports, excellent growth, excellent everything. Market hates it. So just like Affirm, they're not out of the woods. They need to, just like Palantir, they need to hold this week's low. Otherwise, they make a slightly lower low, which I would buy again. I would get long PayPal again if it falls lower. If I'm long now, I'm okay holding it. How I prefer credit put spreads, so I'm not disappointed when they don't break out. At least I'm making money while waiting. Qualcomm worth holding. I want to possibly trade it. I think this green line is doable. Unless AMD crashes or so. I don't know exactly what they do, but it used to be an Apple company, I think. Not sure what they do now. Digital communication. Anyway, so technically the chart is conducive for this action. Let's see if it happens. It needs to hold support. Roblox, they know how to make money, that's for sure, but the stock is not finding footing. Almost like Affirm. It's the whole sector. Anything that looks like ARK-K, they hate it. So be careful with that. You do have support, but it's imperative that they hold it. In fact, it's imperative they don't go near it. Okay. Rivian, be careful. Sell the pops. That's what they're doing. Selling pops, selling pops, selling pops. That's why I did this yellow descending channel. Look, pop sold, pop sold. The next pop, sell it. Unless they break through this, then it gets to here, then sell it. Rivian can get to $10. So I'm not saying it's going there. If I'm long, I most definitely, I implore you to not add willy-nilly. Unless you know something new, it's just ridiculous. If you're looking to get long for the super long term and you can't wait, fine, at least take 1/3 position max so you can add. Why not wait? Because if you take 1/3 and it dips and then you enter, then it looks like you entered in hindsight at a better location. If you take 1/3 and it rallies, you're already long. Not to a full position, but you're already long. What's bad about that? Roku, almost same comments as Netflix. Tight range now. The battle is between 113, 112.5, and 119, and definitely 121. Technically, it should rally back to 123. Yep. Target if markets allow it. What does that mean if markets allow it? If markets are correcting, nothing is going to rally. I'm going to go update the chart. Now, of course, you lose the support, you're going for a ride the other way. This one, I guess I should have put that too, in all fairness. This is a catalyst, but it doesn't need it. It's got a swing built into it. Then we come up to Sava. No save on Sava. That's what I say about it. What is happening with this stock? So technically, this is a wild card. So if somebody wants to gamble on it, I don't blame you. It can move extremely fast, and technically, this has. It can be 34 in the next couple of weeks. Did you hear that part? Okay, so this is available. I should have done that. Potential wild card move. Low odds. So make sure risk is appropriate. Meaning I don't make it so it's going to break my piggy bank. Unless you're a pure gambler. So I want to show you also the longer term perspective on that guy. So there is still risk of filling gaps, and I don't know what's going on there. I played once with it and it wasn't a happy experience. So clearly it's nothing about the P&L, it's all about news. That's why it's so risky. So how would I do it? I would not want to own shares. I would want to spend a few $100 to make a few thousands, and then stop out halfway through my few hundreds if I can. So I wonder if I could put what color would describe such an opportunity. What is this one? Oh, that's the one I've chosen. Orange? No. Purple. I'll probably forget. Anyway, there is a rally opportunity, but it's highly risky. Starbucks did what we thought it would do with that green arrow. Not what we thought it would do. One of the paths we drew. This didn't happen. This didn't hold. Therefore, now this is resistance. This is resistance. A whole bunch of resistance. And what is this? Credit put spread, for example. 422, 82, 81, which is in the money right now. So not even the credit put spreads are working. So there's still time for it to work out. But what I'm saying is strong support turns into a super bearish catalyst. So this is where you say, maybe it's so bad it's good. That's not going to happen. We'll see. The fact that Schultz said he's stopping the buybacks, I think, is what capitulated the stock. And I said, you know what? It worries me that he's saying that. And then I read why. He wants to invest in his employees. So that is a flag. But then he said also in the store. So I was like, okay, so maybe he's going to actually invest in things that are going to make them money, which I prefer over than doing stupid buybacks. But it says they could be hurting for money. I don't know. So be careful. Especially that they have a big presence in China, I think. SE, I still like it on the long side, even though it's still challenged. It's got a solid business, and people will have to invest in good businesses, and this is a solid business. So SE is like you combine Square with Amazon and Microsoft. Why Microsoft? It's from the gaming perspective. It's like a hot gaming company with a huge e-commerce business, and they also have financial technology. Their P&L is unbelievable. So on paper, this should be like at all-time highs. But it's not. Shopify. The mini Amazon, really solid company. Horrible way to trade it in the options market. This was an older comment. Buy the dip at 558 or chase the rip above 572. The rip happened, so now they're falling back into the rip level, the 572 level. This is an old comment. So if I go to 120, I think. So that comment was back here. So the base for the last rip, I put a line here. That's the new line I added. The target is now the base. They're falling into the prior target. So maybe they swing back up. You lose this one, the markets are crashing. Because if you lose this one's going into the 300s, most likely. And I don't think we're there. But the scenario is there. So likely find support, swing back up here, get out. Skills, come on, quit it. Stop. Who's still playing with this thing? Okay. Besides the fact that the company is doing fine on paper, Wall Street says, no, we don't want you. Get out of here. So when a stock goes down to $2, then it's a pure gamble. Just buy the stock if you want to and hold it forever. Forget the options on it. If you're actively trading it, then just do it, and it's not that great. It's too choppy. So my opinion on skills. SMH, like AMD, SMH arguably already lost the neckline, and they're already in a breakdown that's going to take it to 230, if not lower. So it doesn't bode well for AMD. But this is the scenario we're tracking, this red thing. And I believe if they lose this one, this red thing is not the target this is. Which means AMD broke down, which means Intel broke down into the 30s, which means the markets have crashed. See how this negative story comes in? And you can track it all from the NQ chart. Like, we can't afford another red tick. By another red tick, meaning another serious weekly red tick. Snow. Another one of those companies where high growth, high spend. See, yellow, red, green, blue. So Wall Street doesn't like it. What are they doing? They're selling rips. Rip, sold. Rip, sold. Next rip to get, sell it. So if you get a bounce and you get to here, get out. Meanwhile, you do have support. If it falls to 192, 193, I'd be tempted. Right here, if I'm long, I can stay long. I'm not screaming to get into it. What is this? Southern what? Is this a transportation company? No, electricity. Okay, I don't know what you want me to say. Thanks, Rez. That's a rally, chop rally bigger than the rally that came, so it's up in open air. Use your judgment. Mom, you can't invest in this company. You missed it. You're gonna have to wait about 10 years. XLU is at all-time highs. If you want to short the markets, short these guys, because these guys have the fastest to fall, the most to fall. And you say, oh no, they're a hedge against the market. Bullshit on that. Nothing stops from falling if the markets crash. They may be better the first couple of days, but then everything will turn around and will crash. You cannot convince me of otherwise. They say, oh, I'm getting defensive. No, if you're worried that badly about the market, you should be out of the market completely. SoFi. Okay, I don't need to say anything. 7.5. That's all I have to say. 7.5. So we got long the day before this, and then it paid very, very well. If you booked it, kudos. If you didn't, this is your chance to repeat. Am I confident it's going to stay at 7.5? No, but this was caused by the management itself. Out of the blue, they came out, no earnings report, nobody forced them to. They came out and said, we may be not doing as well. How about you just wait and see and tell us in the earnings report, so we'd be waiting for it. Because I would have booked my profit going into an earnings report, but I didn't know there was going to be an unofficial earnings freaking report. Boom. That's what happened. So the reason that got me long here is still here. Business is on rails. This here is wrong. RONG wrong. What happened to their P&L? Go to Yahoo Finance. You will see their progress on the P&L. This is wrong. And that's part of the... I bet you it's total confusion on what the company is. And apparently the company is confused themselves. No, it dropped on the company headline. The company itself revised its future. That was before the forgiveness of the student loan forgiveness. And the way I understand it, the government is going to pay for these loans. They just delayed, they kicked the can. The government wants to buy the apparently young voters, because that is by definition their reason of having low approval rating going into midterms. That it was the decision on, which is shameful. It's really shameful that they cause all kinds of grief for everybody just because they want to skew the perception. Anyway, the business is solid. That's my statement on SoFi. If I own shares, I wouldn't add. I just wouldn't panic based on one headline, because the government said they will pay it. Now, if the government forces companies to lose money for them to buy votes, you be the judge. How should somebody do? What should somebody do with that information? Spotify has good support below, opportunity above. I don't mind being long. This is a controversial company, so you have to have a stomach for risk. And in this case, I favor the upside scenario more so than the downside. They're shrewd business people. The fact that they took the heat from the highly controversial guy tells me that they're not that threatened by pressure. I like it. So I favor the upside opportunity. There is a gap all the way to 187. So if you take this out, you will have a hiccup here, but you will get to 187. Square, great business, similar to SoFi, only better from the perspective of they have P&L that they can stand behind. So this here says it's possible that it goes to 132. I don't disagree, but it's also possible to trip here and get to 116 or 112 first. And if so, I will get long for a trade and a recovery. So if they fall on banks this week, perfect opportunity to get long somewhere down here with SoFi. I mean, Square. Whew. Freudian slip there. So losing this one could trigger a drop to here, but I think it will stop somewhere here. It won't fill all of it. SST. You're just going to have to do some. What? I mean, this is, yeah. 20 support, 18 support, 27, 28 hard line in the sand, and then of course all these things up there. Yep, this gives you more granularity. So 28.7 is going to be a problem. AT&T, so I don't think we need to talk, because apparently there's a major headline coming out over the weekend. Don't know what it is. Something about splitting off from Time Warner or whatever. Maybe it's good news for the stock, because I believe that was the headline that everybody hated. Warner Media Discovery completes merger. Oh no, wait, that's completing a merger they had announced before. Anyway, so maybe there's a material. That aside, it's a good business to own for dividends and for a, like, look, it's buried in, decades low. Why not take a swing at it from that perspective and collect some nice 4.5%? So anyway, I don't know what the headline does, and I don't know how it's going to affect your options if you have them. TDC. I wonder if this, Teradata. Okay. I don't like AT&T for me, but you heard the ifs, right? It's a way to collect 5% yield on a stock that could have a multi-year recovery process, like GE. I didn't like GE, but I went long at 7, and I shared it because I thought the opportunity was they're as crappy as can be, and they make a ton of money so they can get themselves out of trouble. Same with AT&T. I'm not long AT&T, nor do I want to, because I don't need dividend income. My dividend income comes from crypto. I get 10%, but not everybody's willing to take the risk on that. I'm happy getting paid every month, and I compound them daily if I have the time. Okay, so the weekly, sorry. TDC, you have clear trigger point. Ascending high lows, so the bulls have wind in their sails, and they have a trigger point. So if they go above 52.60, expect 60, if not more. Teladoc, beware of my comments earlier at the open. So I think there's another company that reports, and what if they say something about the government pulling back spending? It may affect this one. Technically, you have support, you have trigger above. So the opportunity it's there. I would buy dips into Teladoc as a trade. It's been painful over the years. Oh, not over the, yeah, I guess so. It's years now. If you followed the rally and didn't book anything, you got shellacked. And it fell for months. And the business is healthy. It's just people don't like I said, expanding yellow bars down below. Even though, look at the business. This huge expansion. So at some point, people are going to realize, holy crap. If you're a conspiracy theorist, you should look into the fact as to why it spiked so big before the actual pandemic was announced. Just saying. Okay. TLT. Okay. Caveat. I'm going to go to TNX to talk about the TLT. So the TLT is an ETF that represents the price of bonds. It moves in opposite directions than the price, the yield that the bonds pay. For example, the 10-year yield, this is the chart for it, moves in opposite direction, say, from the TLT, which is a 20-year bond price. A while back, I shared a chart and I said, if this is correct, this can go to 2.8. And if that does happen, the markets are going to be unhappy. And we're kind of like on edge because of it. In 2018, February, CNBC had a special going that, my God, if it hits 3, the world's going to end. It did hit 3 and went above it, and we had a correction because of their words. Art Cashin said, if it hits 3, we're going to crash, and they crashed. And then in April, he repeated the same message at 3.25, and it hit 3.23 and crashed. So be aware that this could get to its target of 2.8 or higher, which means that the TLT could get to its target, which is in the low 100s. I know a lot of people, or some people, message me long to TLT. I told you I took a long, and I told you I would stop out immediately because it's a bear of a ticker and it's unforgiving. So if you took a long on Friday, fine. If you get a bounce, take it. Yes, it could rally a lot, but take the win because it does, or book some, because if you get to 130, you're going to face a lot of resistance. Now, you take out 133, you're probably going to go to the moon, but know that your target is well below. I don't know what this is. Taylor Morrison. Interesting spot, though. Let's go to the daily, see if we can get some information. Yep, you're falling into a prior support zone. If you're long, I don't mind it. You just need to know what you're doing with that. Swing opportunity 29. It's there. Toll Brothers, be careful. Home Builder, be careful. They all look like they've fallen into support. Every home builder I looked at. Not a hard line, but a zone. This is what I'm afraid of. And the threat is there. But for a trade, it's a good place to get long. TPH. Another home builders? Wow. They all like the letter T. Same comments. Falling into support, should hold, but be careful. So if you're swinging back up, you get a rally to 22, I would get out if it was a trade. Tesla, be careful. Oh my God. Okay, so this is the carefulness of Tesla. I'll just show you the picture. You can't short Tesla comfortably. Now you have a trigger in that yellow zone, and you also have a must-hold situation. So which comes first, 945 or 1120? You get to 945 if you lose footing from last week. You get to 1120 if you break out from the yellow ball. Simple. If somebody's asked me if there's an inverse head and shoulder, what, cup and handle? Inverse cup, what is that? AHIHS. Anyway, there's everything. I'm drawing all you have bearish and bullish patterns right above and right below. Which one's going to happen first? That's the matter. What you call it doesn't matter. It doesn't change the fact. You go below last week's low, you're going for a ride lower, catch the falling knife there. You break out from last week's highs, you're going for a ride higher, fade the rally there. TSM, be careful. Has support, but needs to hold, and if it doesn't, going for a ride lower. Everything left even, no new news, no headlines, no nothing. I think we hold, and we just meander on higher one more time towards 105. Twilio, almost the same comments. They started buying dips, and then so remember we said descending for such a long time, finally they're building an ascending pattern. Nope, they're not. They're back to the base. So it's almost like what is it? Affirm. Okay, you lost the channel, fine, we can take the channel out, but you can still maintain some decency, but not by not covering this gap. And if you cover this gap, I guess I'll try one more time to get long with a tight stop. UAL 20, let's see, 1 day, let's see. All right, extreme low, I don't know what that was all about. I kind of remember. Now it has support below 40. 40 to 38 is support. Let's see if it holds. I think this was a specific scenario. It has a lot of resistance above. It has a lot of resistance above. So you take out 47, you can get to 52. But I would rather do a credit put spread rather than buy calls and hope for a rally. And then deal with the credit put spread if it gets under fire. Make sure you don't get into a situation where you're stuck with a trade around the earnings. UPS, like FedEx, is challenged. Wow, what? So it's falling into support. One would assume that 180 should hold plus or minus $5. If that's the assumption, one can trade this on the long side however you get long. Stocks, calls, debit call spreads. Favorite is credit put spread. And look, better entry point. Why not sell a credit put spread down here? Earnings are coming. Last earnings was a monster. Pop and drop and pop. So 3 pops, 1 drop. What's next? I don't know. Hit me up before the earnings on earnings day. Maybe I'll give you a good guess. Upstart, I don't mind another long. We've nailed it 3 times. The long here would be for an opportunity to do this, which hasn't happened, but other stuff have happened. So if I go to 15, it's like a trading opportunity where I have support below. I'm going to delete these. Support below and the opportunity to snap back rally big time. So it's a very fast trade setup based on the 1 hours. So credit put spread, I would repeat that. Let's see where it's coming out. And the idea is to capture a swing back to 120 one more time, like one of these or this. Let's see if it happens. Very scary though. So USO, somebody said, isn't it time to rally? Maybe so. I would get out though. I'm going to contend that they're starting to sell rips. Rip sold, rip sold, rip. So I think it'll go to 71 before it gets to 78. And if it loses 71, I think it goes into the 60s. And once we get into the 60s, then the experts will bail on the idea oil going to 100 billion. I'm kidding about that. It's probably like 50 billion, but anyway. Verizon, the bounce happened. Let me go to 1 day. Okay, so this was the plan. Oh my God. And it happened, and then they dipped back into the base from which they sprang, and then it rallied again. So the next action is that it's going to fade and repeat. Otherwise, I would chase it above this. So now we have a better trigger, but I don't think it happens. So I had several book levels, book 2 and book 3. So hopefully you booked between 2 and 3 on the way up. Stop 1 and 2. It doesn't look like it wants to stop out. Fall below this. So next time it goes to here, solid credit put spread. I already did CRM. It's on the list. The idea with CRM is time to do credit put spread with a tight stop. WFC. Let me see here just to make sure. I'm pretty sure I did it. Yep. So WFC bank, don't want to deal with it over the earnings. It's a crapshoot. If it does pop on earnings, get out. 52, it should be death. 51, I don't think they can. It can stay too long above that. If it gets to 54, I'll sell a call spread. Bearish. If it loses 45 and change, it probably will lose 40. So be careful. When it's time to try to catch the falling knife again, but there's earnings coming, so you can't do it for too long. Also, I don't know if they have Macau and whatever, so if there was no earnings, I would sell a credit put spread. But there's earnings, I don't dare do that. Because you say, oh, I'll get out before the credit put spread. Okay, so what if you do that, and then it falls before the credit put spread, before the earnings, and then you have to close a loser? Most people will say, okay, I've already lost, so I'll wait, and then falls more, and then you lose maximum loss, so not good. So utilities, XLU, not utilities, what is this? Yeah, utilities is, I think it's an all-time high. Okay, so what's the thought process there? Someone tell me, please. It only pays 2.6. I can lend the government money and make more than this. No, not for me. Look, you hear the word divergence. Here's price rallying. This is the internals falling. Those two shouldn't happen, and when they do, they're not sustainable. At some point, this guy is going to break down to 0. No, it's not 0. It's like 69, 70. The target of this pattern is 70, but I say it hits 73 in the next couple of months. So I'm not interested in chasing it or fighting with it. Zim, you saw my notes. So it's a brand new company to me. I've won big time on the way up. I could risk some money on the way down. I think the risk I shared was at 50 right down here. So as long as price is above 50, I'm good. So thanks, Bruce. And so the idea is still fine with me. The company had explosive growth in revenues. I don't know if it's sustainable. That's why I disclosed it. I don't know much about it. Zoom, I'm still long. Also, I was up 100% and now I'm not, but I'm still long for the long term. My calls are for June, and I'm tracking this pattern that could bring it back in the 240 to 280 range. There's no trigger for it. I'm just I'm going again. My thesis. So when the pattern draws itself, it says go look for longs, and I haven't found a reason, technical reason that says upside is coming. So my thesis was buying it into downside support, and that's what I did. So Zscaler, I don't trade it anymore. We've had huge wins with Zscalers, but it's like Shopify. The quotes on their options are incredibly difficult to nail down. So be careful when you trade it. But it is a fast mover, and it is at support. So if it holds the support, it can be in 255 in no time. So it has that kind of potential, but the opposite can happen. It can be 200 in no time. So it has some support here and some support at 200. So you cannot lose this. This will bring you back lower. This is not support. Now it's resistance. So these are the tickers we just talked about, all of them, hundreds. Let me see. Let me pause the recorder and see if I can go look at answers. Okay, so I'm going through the questions that came in with the tickers. There's some answers. Somebody's asking for the IRA, which one do I prefer, SPY or QQQ? It doesn't matter. They move together eventually over the long term. I wouldn't take either of those two. We are near all-time highs. So if I'm building a position for the IRA, this is not it. I would wait until the market crashes, and then I'll jump in. That is, nibble, 1 point, and not all in. Somebody's mentioning SST has a bunch of calls. So the calls are bought and sold. So you have to see who's smarter, the buyer or the seller. Kramer was, I stopped reading after that. Brad. Forgotten about AT&T Warner split. If it wasn't news, if it's just the completion of something that started before, I don't think it should be that important for T. I want to sell puts and credit puts for April, beginning of May. Okay, John, we can talk about that. Just be careful with selling too many things. Especially some of the ones I talked about have some special risks. Investment on, okay, so if somebody asks about an investment, so make sure you read my comments from that perspective. I often say, this is a comment about investment, like ET. I think it was too high for an investment, for example. USO, heavy support. I told you what I think. Trade ticks going over. I think I will do a separate video. SoFi we spoke about. Sold various levels. If I get assigned SoFi, I would take the shares, John. Man, is this the same John? John! Holy cow, what do you got, like 30 tickers? No wonder we have a lot of tickers. Well, yes, thanks. Keeping me busy, I guess. Recommended regarding to learn technical analysis. I don't understand Laker Chewy. Technical analysis I learned on my own. So if you're in my room or if you watch my videos, you're learning a lot about technical analysis the very simple way. First, look for levels. Start there. Buy, sell, strike price. Okay, so I will have more information about some credit put spreads. Like I mentioned in Disney, for example, Airbnb. Hang. Zim, we updated. Tech is beaten down sector. So the comment on tech, Marcus, is hopefully you listen to my warnings there. Make or break week for tech. Really, that's what it is. Make or break week for tech. That's going to be my message. Take cues from the cues. Take cues from the cues. Make or break week for tech, especially semis. Long-term entry for space should be a no-brainer. You didn't put a ticker as space, but space I would own for the long term because it's theoretically that's what it is, long term. New to the room. All right, welcome, Larry. What is the question? Would like to understand credit put spread. Okay. So the advantage of a credit put spread, Larry, if you're here, if you're not, hopefully you're watching. The credit put spread, I take a risk down here, and I don't need a rally to win. Where did I? Okay. So this is a stock that has recently fallen. If I'm catching the falling knife by buying calls or a debit call spread, I need a rally to win, and if I don't get a rally, I lose my money. If I sell a credit put spread, also called bull put spread, I don't need a rally to win. In fact, it can fall all the way to here, and I can still make some money. So that's the difference. The money I make is finite. The money I lose is finite, but I need nothing to happen, and I win. So I much prefer to bank on this versus buying and hoping. That's the main difference. Okay, no problem. Thank you, thank you. I appreciate the kind words. Oh my gosh. Good earnings plays this week. Yes, we will talk about them in on a daily basis. So is it Levi? Levi, is it? No, who is this? Oh, Jump Diffusion. Hit me up during the day. I know you're in the room. We'll do those on the fly. Swing Trader Curtis, I know you. I have a small options 45. I like the company. How do you choose a month to buy? Okay, so if you're buying for the long term, I would usually need at least 30 days on the clock. So I would pick May or June. You don't want to go too far out because then you don't gain fast enough. Rolling the option in 2 months really work. Yes. So here's the point of rolling. So the rolling is really booking a loser. So when do I roll? So let's say I bought a call and price of the call dropped. And then I look at the delta. The position, let's say, was 1,000 and now it's 300. And the delta, which is the opportunity of this trade to work out, drops so low that it's almost a guarantee that that 300 is just going to die. So what do? I quote roll it. What does that mean? I take it back, I sell it, basically book the loss. If I want to stay long, that's a really important part. If I still want to stay long, I take that booked money and redeploy it somewhere else that has a higher delta. So if I had 10 contracts with $300 that I just saved, I can't do 10 contracts because that requires me to add more money, and that's not my point. My point is to take the same 300 with 3 contracts now, maybe, I'm making up these numbers, and have a chance at making my money back. My goal is no longer to make money. My goal is to recover the loss I didn't stop out of. So be conscious of that. All right, that's pretty cool. Good question. So somebody else just popped in and said, can I talk about Bitcoin? I already did. The short story is I still think Bitcoin is going much lower. It needs to recover convincingly 46, and it hasn't done that. I'm long coins on the first dip to 33. I will get longer at 28 and a lot longer at the low 20s. I'm a proponent of Bitcoin, and I think technically it's broken. It needs to recover 46. Yeah, Nick, it went to 48. Yes, but it didn't hold it. It went right back to the low 40s. That's not very convincing. The recording will be available. Who do you use to coin purchase? I coin purchase from, what is it called? Oh, shoot. Crypto.com, right? Yeah. The one with Matt Damon and LeBron. Okay, so I'm going to stop the recording.